Good morning, everybody, and welcome to Morning Markets. So today I'm going to focus in on yesterday's release of the FOMC minutes. But firstly, what are the minutes? So FOMC stands for Federal Open Market Committee, and it's their job to adjust interest rates and to adjust the trajectory of monetary policy overall in the US. So an incredibly important job that they do. But what's the background ahead of those minutes being released? Well, these are things that I'm sure you'll be really aware of. Firstly, inflation's high. If we look at the CPI print for February, it's coming in at 7.9% year on year in the US. And just to give you a flavour of how high that is, the central bank's target is 2%. Now, why is it so high? You've got things such as higher energy prices, higher food prices coming through. You've got those supply chains that are struggling at the moment. And all of these things are pushing on the prices of goods and services. So what does that mean? Well, it actually means that governments and central banks need to act. And it's not just prices going up as well in the US. It's actually wages are going up. Now, I've got what's quite an incredible stat here. So for every single unemployed person in the US, there's currently 1.8 job openings. So it just shows you just the power of the employee right now. And what a lot of people are quite nervous about is wage rises are coming through in the US, but what they don't want to see is a wage price spiral come through overall. But let's concentrate on those minutes. Let's think about really, what was talked about yesterday. And really the key point is that instead of having a usual 0.25% hike, the FOMC have come in with a 0.5% hike. Now, when you think about that, you probably think, well, it doesn't really make too much difference one versus the other. But remember, this is the first time in 2 decades that you've seen such a large hike come through in interest rates overall. Looking at the discussions that they had, the other thing that the FOMC discussed was their balance sheet. So one of the things that they did during COVID time to help shore up the economy is to buy bonds to stimulate the economy overall. Now, what they're doing is they're actually reducing the size of that balance sheet, and they're doing that and also as well as increasing interest rates as a way to help cool demand in the economy. But look, I've talked about the background of the FOMC, inflation. Really, what's the most important thing here? Most important thing is, what do we take from this? Well, actually, when we look at the minutes themselves, there wasn't really any surprises there. We know that interest rates are incredibly low right now, and there's a good reason for that. It's because we've just gone through the COVID crisis. But the reality is that economies, particularly the US economy, are very strong right now. So you're seeing central banks dealing with that by increasing the trajectory of monetary policy overall. But look, let's just take a step back from it and really think, what do we know? We know inflation's high. That's not just in the US, that's in the UK as well. But the reality is that central banks and governments are dealing with this right now. And we're going to see more and more of this come through over the coming months. Okay, I hope you enjoyed today. That's everything from me. Just a quick plug from me as well is we are filming an investment management special, a podcast. Please do tune in. So it's going to be Jeff Casson and the team, and it's going to be a really good discussion around what we've seen over the quarter overall. Okay, thank you very much. I look forward to speaking to you soon. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.